start with what's on every investor's mind: the fear and the uncertainty dominating the crypto headlines. Here in Canada, whether you're watching CNBC or just scrolling Twitter, the talk is all about price drops and volatility. What headlines call a crash is more of the market reset, a harsh but necessary shakeout where weak hands exit and genuine opportunity emerges. Underscore that corrections aren't just scary numbers on a screen. They're essentially for creating balance and in many ways usher in a new cycle. When retail investors in Ontario or Alberta hit the panic button, institutional players often headquartered in Toronto or working through Canadian banks quietly accumulate a lower price. Retail panic creates buying opportunities for sophisticated funds, pension managers, and institutional clients. Phase as necessary. It purges over leveraged positions and speculative newcomers, ensuring that those with real conviction remain standing. As we've seen in cycles before, from Vancouver to Halifax, it's these strong hands, often with deep pockets, that set the tone for the next move. So while it can feel unsettling to see portfolios dip, this is at a market renewal, not market ruin. It's when everyone is responding that the seed for the next rally are often sown. Institutional moves and market structure. Digging deeper, attention shifts to the institutional stage, a space where Canada is increasingly influential. Every major correction in the crypto, including XRP, mirrors the broader financial cycles. Familiar to Bay Street, analysts leverage builds liquidity, drains the volatility index spikes, and just as sentiment bottoms out, institutions make their move. In Canada, we're witnessing signs of the first hand. Look at the evolution of XRP ETFs on the TSX, or Canadian Imperial Bank of Commerce, recently integrated with Ripple's technology to streamline cross-border payments, a move that gives both retail and institutional clients modern rails for value transfer. When mainstream headlines focus on chaos, transactions data and on-chain flows reveal accumulation by the big player. Number of XRP-focused investment products available here, from ETFs to custody solutions. Market data shows inflows growing even as retail sentiment lags. Institutions like Canadian pension funds or alternative asset managers are positioning for long-term exposure. The landscape is shifting from speculative to structural, and XRP is the heart of what transformation is. As regulations evolve, especially with the Canadian Security Administrations introducing new oversight via CIRO trust and accountability in the crypto platform spaces are increasing. This environment is reopening for big financial players to step in and take leadership through enhanced transparency as well as investor protections. Despite the day-to-day noise, the foundation behind XRP drivers. First is legal clarity. In 2023, a pivotal U.S. court decision helped confirm that secondary sales of XRP on exchanges like those used by Canadians did not constitute security transactions. This is significant for Canadian investors, as clarity in the U.S. often reassures domestic regulations, clearing a path for broader adoption and product launches like the new ETFs. The Partnership Canada is increasingly central in Ripple's global network. Major institutions like CIBC and the Toronto-based Ripple Ventures now have tangible public partnerships with Ripple's Labs, domestic remittance Providers like Zip, Remit are using RippleNet to speed up cross-border payments, not only with the US but globally, including emerging markets where many Canadians regularly send funds. These show Ripple's integration with Canadian financial system is not a theory, it's happening today. Lastly, real-world usage is up. Canada's using penetration rate for cryptocurrency is projected to reach over 30% in 2025, with XRP adoption trickling steadily upwards. The value transfer on XRPL and Canada is rising, and more Canadian financial service providers are piloting on-demand liquidity programs. Further legitimacy, XRP uses a case as a near instant, low-cost settlement tool drives home the message: strong partnerships, greater regulatory clarity, and a steady uptick in the adoption metrics provide a solid base for long-term appreciation, even when the prices seem stuck. So why do so many Canadian advisors and investors get their calls on XRP wrong? Kevin suggests it's because most people fixate on a short-term charts instead of stepping back to see the holistic macro landscape. This is especially true here. News cycles can blend US, European, and homegrown Canadian narratives and create noise. Many retail traders are swept up in emotions. Day-to-day prices swings in Canada, coverage of regulatory headlines, or sudden Twitter storms can trigger emotional decisions. Yet, beyond these waves, Canadian investors' institutions have access to both blockchain analytics and a traditional market for intelligence, giving them a leg up on timing and accumulation. Also outlines the classic market reset pattern. Retail panic and forced selling create liquidity, which is absorbed by smart money. Technical indicators like declining exchanges, reserves, rebounds in the future open interests, and wallet accumulation all suggest the market is quietly bottoming out. These clues have been seen before by Canadian traders, whether it's a real estate, equities, or crypto. By the time the tide turns, the retail sentiment flips positive. The opportunity for best entry is often gone. It emphasizes that in Canada's maturing crypto space, smart investors ignore and short-term hysteria and focus on tangible adoption, underlying fundamentals, and real flow money. What's unfolded as a misunderstood super cycle. And the Canadian landscape is right. At the forefront, recent trends show Canada's digital asset market is predicting to reach 913 million USD by the end of 2025, driven by increased institutional adoption, ETFs launched, and growing clarity from the regulators. XRP and Ripple are heading transition in Canada from high-level partnership to mainstream accessibility by Canadian registered trading platforms, with Bay Street warming no more diversified crypto locations, especially as traditional systems issue like SWIFT limitations affect businesses. Real alternatives like XRP are gaining traction among advisors, retail alike. Legal clarity, new product launches, expanding bank integrations, and growing international payments volume put Canada on the frontier of the next growth phase. Message for his fellow Canadians: tune out of sensation, follow the macro data, and watch the business partnership, not just the charts. In this environment, XRPs, for those keeping their eyes on the long term, the road ahead may not be smooth, but those who understand the Canadian content and position themselves earlier could be a part of generational transformation in digital finance. What seems like a turbulent moment in 2025 could be the hindsight mark for foundation for historic rally. Here are original Canadian call to action lines you can use to conclude your XRP YouTube video tailored for Canadian audiences and focus on community. If you're watching from anywhere in Canada, let me know in the comments how XRP fits crypto portfolio, what questions you still have about the Canadian landscape. Your experience helps other Canadians learn. So thinking about XRP or digital assets in Canada? Subscribe and join the dialogue for updates on Canadian banking, partnership and crypto ETF launches, and tips for navigating regulations here at home. Share this video with your Alberta, Ontario, or BC investing community. There's a lot happening that Canadians need to know about. That conversation here could help someone spot an opportunity or avoid a pitfall. Are you a Canadian financial advisor, entrepreneur, or investor tracking Ripple and XRP? Drop your questions, insights below. The more we share local perspectives, the smarter our portfolio gets. Don't forget to like, subscribe, and turn on notification for more Canadian analysis of crypto, XRP, and the future of digital assets. Let's build financial literacy and wealth together, coast to coast. We'll see you in the next video.